Hello and welcome to today's Where's the Trade, and we're going to look at Abercrombie and Fitch. And taking a look here at my chart, I'm looking at a daily chart and just taking a look at the overall price action from the beginning or for the year time frame that we're looking at. We're at the upper end of this level. And when we draw a level of resistance or levels of support and resistance, what we want to look at and where we could push into is we have some congestion right here into and above, or right at 50 to 52.50. I want to walk you through a potential bullish trade that occurred in Abercrombie and Fitch in the January options today. So when we take a look here at the short-term time frame, we have what we gapped up off of, and we continued higher here. And this is filling in the price void where prices actually gapped lower. Same thing that happened here where prices gapped lower. We filled in that gap, and there is a gap to be filled here. But with the trade that I saw today, I'm not quite sure if it is going to fill in that gap just as of yet. We could see with the holiday season a push back into these highs. One of the other things I want to look at as well is going to be the chart here, or the volume profile. So we have a little bit of resistance right here, about 47, which we just showed on the other chart with the lateral. But if we come in and look at the weekly time frame, this is where the resistance is at the peak here, about 45, and we could see a little bit of a move into potentially 55, and that's where this level comes into play here. Anyways, looking at the options today, let's close down December and let's focus in on January. January, there was a large trade that traded in the 47s and the 50 contracts. Looking at this, you'd say, oh, there's both of them are active, and it looks to potentially be a call spread. Well, the top trade today was the 7,500 January 50 calls trading at the mid price at $1.01. Both of these trades took place off the tape, so they're marked late. So it's hard to dictate if they're actually a buyer or a seller. But as where the price is traded, it potentially looks like this is going to be a call ratio spread. So they sold. They sold 7,500 of these January 50s, and they bought 3,750 of the Jan 47. So they are long the 47s here and short 2 times that amount. And what that would create is that call ratio, which 50 is the ceiling, and anything between 47 and 50 is where they profit. And the reason why they do that is because they can get a smaller debit on the trade. So the trade would look like this if this were initiated by yourself. You'd have to open up a vertical here, and you have to do a custom. And if you did just 10 by 20, which is the ratio, you'd have to do it on the 50s here. And you could see here, if you initiated this yourself, it's only a 19-cent debit to have a bullish upside into that 50 level going into January. Here's what I would like for you to do now. Make sure you click subscribe if you haven't. If you like the video, give it a thumbs up. If you don't, give it a thumbs down. Leave a comment below. Tell me why you liked it, why you did not like it. And if you found the information to be valuable and you think that there's someone else out there that you know that could use the information or find the information valuable, make sure you click the share icon here and share the video with them.